Despite war escalations, Bitcoin is still holding very strong. We have a lot of people trying to short this market, and it seems like we could be getting a short squeeze. In today's video, we'll be talking about the Bitcoin price action, looking at the most important charts. We'll be covering Ethereum, and we'll also be talking about what's been happening in regards to this war and how it can impact the market. We'll then take a look at the liquidity maps to give you an overview of what we should be expecting this week. If you enjoy the content, make sure to smash that like button and subscribe. Let's jump right into the video. So first of all, taking a look at the Bitcoin chart, this is the 4-hour chart, we can see that we are below a very crucial level, which is right above $106,000. Again, the reason why this level is so important, if you haven't been watching the channel, is because if we go on the daily time frame, we were previously struggling to break above here and hold it on the daily level as support. But right now, since we made that all-time high and came crashing down to $100,000, Bitcoin did get a very nice bounce. Now back to the 4-hour chart, this becomes a very important level if we are to see some continuation for Bitcoin before it can potentially move on higher, targeting the previous all-time high, which is right around 109.5K, to at least then give it a chance to put in a new all-time high. If we can't break above these two levels, then unfortunately it will not be looking positive for Bitcoin in terms of if it will be putting in a new all-time high anytime soon. Now, this is the most important level that I want you to pay attention to, not just because it was the area that coincided with the previous daily closes, but also if we take a look at the liquidity map, we can see that from starting around $106,000 up to around just over 107K, there is a lot of liquidity to be grabbed. There's several hundreds of million dollars in this tiny region, which tells me that a short squeeze could be imminent. Taking a look at the longer term liquidation map, we can see that there are a ton more shorts piling into the market at this point in time. So if Bitcoin were to go up to $117,000, it would liquidate around $14 billion. That is cumulative short liquidation leverage. On the flip side though, if Bitcoin were to go down to the low 90K region, we can see that there would be just around $9 billion worth of cumulative long liquidation leverage. I love covering this chart because it gives us an overview about where the market could potentially be headed. Every single time that this chart is skewed in one direction, it tells us that the market is likely to go in that direction and liquidate those longs or shorts. In this case, it's highly likely that we go ahead and liquidate some more shorts before Bitcoin potentially makes its next big aggressive move. When this is balanced, it's a lot more difficult to determine where the market could be headed. Now, right now, my base case going into this week is that Bitcoin will be crawling on higher and liquidating some of these shorts because there's way too many shorts in the market. And as I've been saying on the channel, it would be way too easy for everyone to call the top perfectly. So as more and more shorts pile into the market, it's highly likely that they are about to get wrecked. Now, this doesn't mean that Bitcoin can't move lower throughout this week. In fact, I don't think that we are done flirting with this 100K level. I still think that we will find our way to this level. And actually, as a potential trade setup, as soon as we start liquidating the shorts around this level, I may be looking for a short in the market targeting somewhere down here below $103,000, targeting at the bare minimum this wick. And then if this doesn't start to act as a support level, I would be targeting the lows. And you know my base case, sometime in the summer, we will be chopping and going below $100,000. But I still think that we could get a pretty aggressive move to the upside first. There is a chance that 107K isn't the area where we start reversing, but I will likely start scaling into shorts around this level if the charts tell me that it is the right thing to do. That also reminds me, if you want to trade with me, I do have a signals group, and right here you can access it within my Telegram community, which is the first link in my description down below. Now, to join this group, you do have to message me the word signals, and here's proof of our previous results. All-time stats since we started this group 2 months ago, we took profit 61 times. Our stop loss was unfortunately hit 16 times, and we closed our trades at break even 11 times. If we include the break evens into this calculation, our members profited just under 70% of the time. If we include the wins versus losses and we completely remove the break evens from the calculation, then our win rate is much closer to 80%. Now, of course, this is a very high win rate, and actually over the past couple weeks, it's been a little bit more difficult to get those wins within this choppy market. but I would be expecting that over time, this group will be remaining profitable. If you want to access this group, make sure to DM me the word signals on Telegram and I will be happy to onboard you. But just a quick note here, the only requirement to access this group for free is to 1, sign up with one of my affiliate exchange partners and have a minimum balance to start trading. I'll give you all the details as you DM me the word signals. Again, that is the first link in my description down below. Now back to the Bitcoin chart. I don't think that we need to be aggressive with trading here. As a matter of fact, it's probably better to sit on our hands as Bitcoin continues to chop around. Perhaps this is the range that is already starting for the summer. Now, if we take a look at Ethereum, last week we did have a major fake out. Within my Telegram community, I talked about if we were to break this wick, then it would be a very, very easy long right below $2,783 all the way up to around $2,820. That was a very quick, easy long to execute on. As we broke this wick over here, it gave us confidence to move higher. But now we can see that since targeting this previous resistance level, Ethereum is still within this long monthly consolidation range. So is it going to be time for Ethereum to finally start moving up and breaking out? Or with the recent uncertainty with Bitcoin, are we just going to continue to chop around for months on end as we head into the summer? Now, the thing that you need to consider here is that yes, ETH against Bitcoin has been performing relatively well. However, we can see that we are starting to get rejected at the bull market support band. And let me show you exactly what I'm talking about here. This is the band that tells us when ETH Bitcoin is ready to move aggressively higher. Every single time that we've gotten to this band, it has acted as resistance over the past couple years. And if I just go on the weekly chart, you'll get a better picture. As I zoom in here, you can see that we've had several wicks above this level, only to go ahead and move lower. That is ETH against Bitcoin. And then finally here, when we hit that low, which coincided with the 2019 low on this chart, we pumped all the way up to the bull market support band. And now we are getting those nasty wicks to the upside, expecting a rejection, as I've been talking about on the channel, to potentially put a higher low in. And this would coincide with the upcoming altcoin season, which will likely be after the summer period, in my opinion. So let's see how this plays out. But right now, it's very obvious that ETH is struggling against Bitcoin at these levels. And so if Bitcoin does go ahead and pump, sure, we will get some relief on Ethereum because we have seen some relative outperformance. So let's say Bitcoin trickles on up. That would mean that Ethereum would likely go ahead and trickle on up on its USD valuation as well. And this is very, very positive for ETH and for the altcoin market as we get some short-term relief. However, if we start getting rejected around these levels, because look at these nasty weekly candles. Let me just remove this from the chart to show you exactly what I'm talking about. Look at how wicky this Ethereum chart has been. A lot of indecision. Now, if Ethereum can manage to break back above this next wick, then we would be targeting much, much higher levels. However, we do need to consider that there are still some fair value gaps below this current level. And if I just turn it on the chart here, we can see exactly what I'm talking about. Right here, there's a fair value gap, which is around $2,300 going all the way down to around $2,200. So if Ethereum does end up breaking this support level and we break below its bull market support band, at that point we are in the fair value gap. And another major fair value gap is between 1,850 all the way up to around 2,200. Now, I won't be calling for this unless Bitcoin does get a bit of a steeper correction, but these are just some fair value gaps that you should be considering as it pertains to your trading. If we break this most recent support level, it's likely that we at least tap into the first fair value gap. But right now, Bitcoin is showing some indecision because as we see, more and more shorts are piling into the market, but it does look like Bitcoin is still a little bit exhausted from this most recent pump, failing to break above $111,000. Now, can Bitcoin move lower from here? Of course, it's a possibility, but my base case for right now is that we will continue to trickle on up and liquidate a lot of these most recent shorts in the market. Now, this is the same picture that's painted with this Bitcoin exchange liquidation map. I still think we will go ahead and crawl on higher, but this is the nature of the choppy range because as Bitcoin goes ahead and crawls higher and liquidates some of these high leverage shorts, it's highly likely that more and more people start piling into longs. And then we go back back and forth and back and forth into this summer chop that I've been discussing. Now, these are still good opportunities to make money. It just becomes a little bit difficult if you're actively trading this market. Again, if you want to trade, make sure to join my community. That is the first link in my description down below. Very easy. And if you don't want to join the signals group, no issues. I still provide a lot of value on a daily basis within my free community that you get free access to. So, taking a look at the total 2 crypto market cap, this is something else that I wanted to cover in today's video. We can see that we're still getting rejected at the $1.25 trillion level, and this has been a historic level going all the way back to the previous cycle. At the end of the last bull market, this is where we got a pretty aggressive bounce, only to dump much lower into that previous bear market. And right here, we can see that it is starting to act as resistance. It tagged as resistance back in early 2024, and right now it is tagging as resistance as we speak going into the summer. It's still crazy to me how the total crypto market cap, excluding Bitcoin, still hasn't managed to put in an all-time high compared to that previous cycle. We went all the way up to around $1.65 trillion, and we weren't able to make it past that $1.7 trillion mark. So let's see. I still think that we will be putting in all-time highs for the total 2 crypto market cap, but right now, this is a lot of indecision, and it is looking more and more likely that we are continuing to get rejected as we head lower. And as I discussed in a previous video, if the total 2 crypto market cap finds its way back near the $800 billion level, I would start accumulating altcoins aggressively as they continue to bleed against Bitcoin as well. So I will make sure to keep you updated when I start looking at altcoins. Right now, I still think it is not the time as Bitcoin dominance continues to increase. We won't cover that in today's video, but you know that I've been talking about this on the channel at length. I think Bitcoin dominance will likely move higher, and this is exactly what we're seeing playing out. And this should provide us better opportunities to accumulate altcoins. And to wrap up this video, let's quickly go over the news. First of all, we have Michael Saylor here. Bigger dots are better. He is definitely announcing another Bitcoin buy every single time that he posts this chart on the Sunday. On the following Monday, he goes ahead and announces how much Bitcoin MicroStrategy has been accumulating. No surprise here. Amazon and Walmart are exploring to launch their own stablecoins per the Wall Street Journal reports. Now, this is pretty interesting because we are seeing that this is the nature of the adoption in the most recent times for crypto. Stablecoins. President Trump's World Liberty Financial launched their own stablecoin USD1, and now other companies are starting to consider doing this after Circle also had its IPO. Now, in terms of war escalations, I won't get too deep into it, but Iran has launched a new round of ballistic missiles towards Israel. So keep that into consideration if you're trading this market because it does contribute to a lot of volatility that we've been seeing recently. Now, there's been a lot of developments with this war. I won't go through all of them, but basically they're going back and forth launching missiles. And of course, this isn't positive for the market. But if you're in my Telegram community, you'll know that I did talk about the fact that I've been relatively impressed with how Bitcoin has been holding up. Now, of course, we'll have to see how it plays out when the stock market opens tomorrow, but this is very interesting to see that Bitcoin remains relatively unfazed despite all of these war escalations. Now, what are some of the repercussions here? Oil prices could rise as high as $130 per barrel per JP Morgan, and we know that Iran currently produces 3.3 million barrels of oil per day, or 3.5% of the global supply. Oil at $130 would likely double US CPI inflation to around 5%. Now, of course, if you want rate cuts, this is not the way to get it. And speaking of rate cuts, both betting markets are saying that they will stay exactly the same. We should not be expecting any kind of rate cuts this week, and that is one of the key events that we have. The Fed rate decision is coming out on Wednesday. On Tuesday, the Bank of Japan has their interest rate decision, and the Bank of England on Thursday. Now, Polymarket says exactly the same thing as Kalshi. They're both above 96% chance that things remain exactly the same, so I wouldn't be expecting much in terms of rate cuts. And to wrap up this video, here are some more key events that you should be prepared for this week. As I mentioned earlier in the video, we'll have to see how the stock market reacts to this war escalation on Monday. We have the OPEC monthly report on Monday as well, the May retail sales data on Tuesday, the Fed interest rate decision on Wednesday, which we just talked about, and the US markets are closed on Juneteenth, which is on Thursday. Now, normally when we have closed markets like this, that's when we can expect some kind of fuckery in terms of the price action for Bitcoin in particular. Philadelphia Fed Manufacturing Index also comes out on Friday. So prepare yourself because it's likely to be a volatile week. And that sums up today's video. So we are seeing some war escalations, but Bitcoin is remaining relatively resilient, moving to the upside ever so slightly and targeting those late shorts. With all of the upcoming key events this week, we should be expecting a lot of volatility. As always, make sure to manage your positions accordingly. If you enjoy the content, make sure to smash that like button and subscribe, and I'll see you in tomorrow's video.